So my name is Simon Dyakowski. I'm a strategic advisor to Cypress Development Corp. So I work with the board and the management, helping them on corporate development strategies and communicating the Cypress story to the market. My background is in capital markets and corporate finance. I spent 10 years working at various investment dealers in Vancouver and as well as a global bank in the corporate finance department. In terms of professional qualifications, I'm a CFA charter holder. I studied finance at the University of Western Ontario, and I hold an MBA from UBC. So Cypress Development Corp is a Vancouver-based lithium development company. The company has a lithium development asset in Nevada. It's situated just outside of the town of Tonopah, which is roughly halfway between Las Vegas and Reno. The company trades on the TSX Venture Exchange under the symbol CYP, and as well as in the US OTCQB under the symbol CYP-VF. The company, as of today, has approximately 72 million shares outstanding and trades at a market capitalization of approximately Canadian $16 million. So in light of recent international trade tensions, which we've seen in the media, President Trump has actually issued an executive order designating lithium as one of the 33 critical strategic minerals of importance to the United States. That's helpful to Cypress, as our project is located in the United States, and in fact it's in Nevada, which is regarded as one of the top mining jurisdictions in the world, let alone in the US. So the order should help with permitting and various regulatory hurdles that Cypress will be facing as we advance the project. In September 2018, Cypress announced the results of a preliminary economic assessment on the Clayton Valley lithium deposit. The company considered the PEA to be successful, notably because of the large size of the project. Between the time that Cypress announced the initial resource estimate of 6.5 million tons of LCE to the PEA, it actually grew to almost 9 million tons of LCE. And that resource breaks down into the following categories: approximately 5.1 million tons of inferred mineral resource and approximately 3.8 million tons in the indicated category. It's also important to note that the project remains open for expansion, with 21 of the 23 drill holes that were put in place ending in mineralization. So in terms of the project economics, the PEA indicated that the Clayton Valley lithium deposit could have very robust economics. In fact, the net present value generated by the project is estimated to be US $1.45 billion. That was calculated at a discount rate of 8%, and it generates an internal rate of return of 32.7%. In terms of key assumptions that the company used in generating the PEA, we used a lithium carbonate price of $13,000 per ton, and that was based off of a benchmark mineral intelligence study that Cypress Development had commissioned for the PEA. The production scenario is based over a 40-year mine life, with a production rate of approximately 20,000 tons of lithium carbonate per year, and that is in fact based off of a production scenario of 15,000 tons of mined ore per year. In terms of capital costs, they came in at around US $480 million, and we note that approximately a quarter of those costs are associated with contingencies and working capital. So a pre-feasibility study is typically, it's an economic study that's typically published after a PEA, but before a definitive or bankable feasibility study. And in order to make this upgrade from a PEA to a pre-feasibility study, the company is required to conduct some more in-depth metallurgical studies, a little bit of infill drilling, and commission some further engineering work. So all those steps for Cypress and for the Clayton Valley project are slated to occur over the next 6 months, and they represent some key de-risking catalysts for the story. So the key catalysts over the next 6 months for Cypress include an infill drill program, which is slated to kick off in the fourth quarter of 2018. The purpose of that infill drill program is to pull up more material to test in metallurgical studies, and as well as to better define the high-grade starter pit that the mine plan envisions. In the first quarter of 2019, investors can look forward to news related to the company's metallurgical test work, and this will culminate in the publishing of the pre-feasibility study also in the first quarter of 2019. The end game for Cypress is a determination that the board and management will make over the next 6 months as the key catalysts that we've outlined are realized on what to do that's in the best interest of the shareholders, whether it be a strategic partnership or an investment from a larger company. We don't know yet. However, management is laser focused on de-risking the project, communicating the results to the market in a capital efficient manner, and ultimately making the best decision for shareholders, value creation.